Hi there, and welcome to Jill's Quest for Riches again. In this episode, I'm going to share my personal opinion and experience about and with SPACs. So if you don't know what SPACs are, be sure to check the little mini-series I made about SPACs. In that series, I tried to be as objective as possible, whilst in this episode, I'm going to be frank and blunt about what I personally think about SPACs. A big disclaimer already, I'm not a professional investor, I'm not a financial advisor. You should take this content as my opinion, and in any case, whoever gives you financial advice, even if it's a professional investor or a certified financial advisor, always do your own research, always do the checks yourself as well. It's your money, in the end it's your responsibility. Do the checks, do the research. I'm only here to give you some extra inputs. Alright, so my personal thoughts on SPACs. Well, this I already shared in the previous videos. I think it's way more risky than investing in established companies. Usually these companies that you invest in through SPACs, they're not profitable yet. They have a very limited track record where you can look, okay, how has it been performing in the past? And the valuation is nearly entirely based on high growth predictions that will or will not come true. The blank check period, so the period before you actually even know with which company the SPAC is going to merge, for me that's way too close to gambling. So in my opinion, that's something I advise any retail investor to stay away from. Unless you want to gamble and do it through investing, then why not in this way? But I think it's really too close to gambling, in my opinion. And even the investing possibilities through SPACs after you know which company they're going to merge with, so after the announcement, I think it's still not the right type of investment for retail investors like you and me. There's still way more risk involved compared to traditional investing in established companies. More so, I also think that there's going to be less and less SPACs in the coming years. I think the hype is approaching its end, or maybe even already tipped. We'll only know in hindsight, right? But I think we're not going to see a big second wave in SPACs. But you never know. My personal experience with investing in or through SPACs, well, first of all, I never ever bought SPACs in the blank check period, so the period before you know which company you're investing in actually. And I probably never will, unless I get super curious and I just want to try it out. But as a rational person, it just absolutely doesn't fit with how I want to invest in and where I want to go and the amount of risk that I want to take. And I think that should count for most retail investors. I did, however, bought stocks through SPACs in two occasions. Once after the announcement of the merger, and that company was Rocket Lab, and once after the actual merger, and that was Virgin Galactic. Why did I buy SPACs? Because I'm still convinced that it's not the best for retail investors. Well, I'm a big believer in the space industry, and I'm even super passionate about space. So you already notice a little bit an emotional component in there as well, which is not the right reasons to invest. But yeah, we're all humans. Next to that, I also rationally think that the space industry is going to boom. And well, there's not that many opportunities to invest in 100% pure play space companies. You have companies like Boeing or Lockheed Martin who have exposure to the space industries, but then also to aviation or military equipment and defense, whilst I really wanted to go 100% space industry. They left me with very little options, so I actually, let's say, lowered my requirements of what I think is needed in an investment for me to put my money in. I lowered those requirements and I ended up investing through SPACs in these two companies. You probably want to know what the returns were or are on these two investments. Well, the first one, Rocket Lab, I bought at 13.15. Compared to the price today, at the moment that I'm recording this video, I made a loss of 18%. I bought Rocket Lab maybe 1 or 2 months ago. And then the second company, Virgin Galactic, I bought at 18.94. Compared to the price today, that's a positive return of 24%. And I bought the company approximately 1 year ago. I don't know exactly, but in that range. In both cases, I bought both companies for the long run, so the return I have at this point actually is not that indicative. Of course, positive is better than negative, but I think I'll only know for sure whether these were good investments in 3 to 5, maybe even 8 years from now. I invested in both companies quite recently. Both are highly risky investments. For both, there's a good chance that I lose 100% of what I invested. And the value of the stocks are both highly based on the growth potential. So on what they could be in the future, not on what they're worth actually today, with the activities they're doing today. So that's it for today. I hope you learned something. That was my personal experience and opinion on SPACs. If you want to know more about SPACs, and this is the first video you're watching, then be sure to check out the mini series. If you want to see more content like this, let me know in the comments, and like and subscribe, of course. See you in the next one. Bye.